Hello and welcome everyone to Oil Asset of the Day for the 11th of February 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, as we head into a new week here, what do you need to know? We went through this in a lot of detail on our week ahead commodity report, the cycle that we're seeing for oil at the moment as a result of the coronavirus. What we're tending to see is oil is gapping lower on the Sunday through to Monday open. This is providing opportunities week to week right now, and we're seeing the opposite happen with gold. So gold is tending to gap higher off the open, then pull back at the beginning of the week and have a counter flow move. Whereas oil, what you're tending to see is a gap lower at the start of the week, a retracement then to fill the gap, but then another pressurized move to the downside. It's worthwhile being aware that over 85% of retail traders have been long oil over the last 3 weeks, trying to catch the bottom of this market. And it's important to have that mindset that hedge funds and money managers, they continue to trim their net long positions, as you've seen oil break down over 25% in the latest months. So you have to be very mindful of this with oil right now, especially if you're trying to pick the low, that it is a crowded trade, that many retail traders at the moment, they're trying to pick the bottom with oil. So far, we've fulfilled what we expected at the start of the week, which is oil to gap lower off the open, retrace to fill the gap and roll over again. In fact, over this week, I'm expecting a move between 48 to 49 US dollars per barrel. And at that level, look out for buying evidence and the potential for then a push higher for US oil. Now, the major data points you want to be aware of at the moment will, of course, be Tuesday's API data. We have Wednesday's oil inventories data, where the expectation right now is for a build in the overall oil inventories. Thursday, we have a report coming out from OPEC regarding global demand. And then Friday, we have, again, another energy report coming out too, which you want to keep a very close eye on, which will be going into more detail about the impact from the coronavirus from a supply and demand point of view and what sort of impact that's going to have moving forward throughout 2020 on the energy markets. So all of these reports throughout the week are going to have a considerable impact for oil. And this creates, of course, volatility. And with volatility, we've got some great opportunities here too. Normally, from a cycle point of view, the months of March and April are very strong for oil. We do normally see the bottom get put in over February. Just be aware that many traders are trying to catch the low right now, and you don't want to be caught trying to get in too high with oil at the moment. The ranges I'm looking at this week would be support at $48 to $49 per barrel and resistance coming in between 52 to 53. But certainly you don't want to FOMO in and buy it right at the highs at the moment, because oil is very vulnerable still until we have a resolution with the coronavirus to be under more pressure until this starts to subside. Now, there was an additional report out of China today, which does suggest that we could be at peak for the virus now. So we're starting to see the amount of new people actually contracting the virus dissipate slightly. And if we do see a new trend here where less and less people each day in China are contracting the coronavirus, this is where you could start to turn a bit of a corner for crude oil, and then you start to see support come in. And of course, you want to keep a very close eye on a number of reports out over this week, which can have a big impact on oil. So in summary, the trading plan for crude oil over this week, we fulfilled the expectation, which was the gap lower off the open, retrace and fill the gap, roll over and take out the swing low. I'm looking for support at $48 to $49 per barrel and resistance at 52 to 53 US dollars per barrel, and to just trade that range over the course of this week. There are some derivatives that we're taking advantage of at the moment in the energy market for a seasonal play over March and April, and that's something that we can go into more detail on the week ahead commodity report. So with that, that's been Oil Asset of the Day. And of course, I wish you good trading.